How much commission does your insurance agent earn, and can you trust their advice? So I recently wrote about this in a blog article and it triggered quite a lot of people. Now let me get this straight first, okay? The commissions that your insurance agent earns may be in fact a lot more or a lot less than what you think. I'm actually really happy when my agent gets paid a commission for selling me suitable products that are great for me and my family, because I think that they should definitely be compensated for the work that they do. But what I do have a problem is when agents actually sell insurance products that are not so beneficial to the consumers but are in fact better for their own wallet. So I've compiled information from various agencies and various insurers, and I've come up with this table that gives you a overall idea of how much your agent might be making in exchange for that advice that they are giving to you. Now when it comes to hospitalization plan, we're looking at about 30% in the first year, which then tapers off later on. This is not surprising because hospitalization plans are actually pretty expensive for insurers in Singapore to maintain given the industry, and the claims are just going up year after year. So the biggest commissions comes in the first year, which your agent gets for closing and selling that plan, and then after that it tapers off to about 2% for the subsequent years. Now the best product in this list in terms of percentage wise is the personal accident plan. When I was young and in university, I had a friend who was selling personal accident plans, and another agent friend actually told me, do you know that he's doing that because he earns a lot of commissions for life? I didn't really quite get what she was driving at because she talked me out of the plan, whereas like that other agent was trying to sell me the plan. But spoiler alert, when it comes to personal accident plan, your agent typically gets about 30% of the premiums that you pay as their commission. Of course, there are a few caveats here, such as if the personal accident plan is being sold to different types of groups, typically those who do claim quite a bit more often, such as if for children versus adults versus the elderly, well, the percentage of that then might differ. It could also vary between agency to agency depending on how the insurer structures that, but a good gauge is about 30% perpetual, which means for the entire lifetime of the policy that you're paying for the accident protection plan. Now let's then move on to term life. Now, term life is actually, surprisingly, at the same percentage as whole life plan. So it's actually wrong for people who are claiming online that term life pays out a higher commission rate than whole life plans, because that's not true at all. But here's where the facts differ. The term life, while also at 50%, because the premiums are lesser, since term life insurance is cheaper, then the agent gets less. So let's use an example. Now, if I sell a term life plan to this person who's in their 30s, that may cost them maybe about $400 to $500 a year. But if I actually put them on a whole life plan, I could get them to pay for about $2,000 or $3,000 or $4,000 a year, depending on how much coverage that they want. Now, as you can see, 50% on just $500 for the term life plan versus 50% of the $4,000 whole life plan is a very big difference. And that's where the percentage may be the same, but the actual money that your agent gets out of selling you the plan differs. Okay, so for life plan, they typically go down as well. It starts with 50% in year 1, it drops to 25% in year 2, and it then tapers off until it hits 5% in year 5 or 6. Now moving on, critical illness. How much do those plans pay? Well, that's about 50%, which then tapers off to 15% and then 4% as it goes on. Again, this is a generalization. Different agencies may have different rates, okay? And finally, ILPs, investment linked plans. How much does your agent get for these? Now, it can actually be quite a bit. So for ILPs that are pure investment, which means there are no insurance protection costs, then the percentage is usually 35% of the premium, which means if you sign a $10,000 premium with your insurance agent to invest that $10,000 in an ILP, well, your agent gets $3,500 of that as their commissions into their pockets. But if it was an ILP with insurance tagged along to it, like a 2-in-1 shampoo, which I don't use for obvious reasons, well, then that goes higher to 50%. So again, a $10,000 put into an ILP with insurance protection as well, 50% of $5,000 goes into the agent's pocket. Now that then tapers off. So ILPs actually makes the agent the most amount of money in the first few years that they're sold, 35 to 50% in the first year, and then about 15 to 25% in the second year, and that then drops to about 4 or 5% after a few years. Now this usually then get cut off at year 6, but what happens is that if your agent is able to get you to top up extra premium beyond that, they can continue to get a cut of that as their commissions. Now if you think that that's the end, not really. Because insurance agents don't just get paid for their commission. There are many other incentive plans to help them, because at the end of the day, insurance is something that most people have to be sold to, rather than people wake up thinking that, hey, I'm going to be buying insurance right now. And as a result, the industry, the incentive structures are designed in a certain way to help people meet sales targets so that these objectives are achieved. That's also what we call renewal commission. Now this may take on a different name depending on which agency or insurer you're looking at, but in general that refers to commissions that are paid for the subsequent years that the client does not cancel the policy and continues to pay the premiums for. Even though the tiering on the direct comms drop, the agent gets something that is called a renewal commission. Okay, and this actually also affects their persistency ratio. So it's actually something that most good agents want to make sure that their clients continue staying on that plan, and they also get paid for it. On top of that, there's also another category called the performance bonuses. So if you're an insurance agent in Singapore, depending on how much you actually clock, how much sales or how much commissions that you get, you are then considered a producer, and you can get a performance bonus, a production bonus, etc. And as long as you hit or exceed your sales target, you then get paid this. So on top of the direct commission, the renewal commissions, you also get an extra bonus for your performance. Nothing different from the corporate industry, whereby if we perform well at work, we get a performance bonus. It's the same concept here. You may see that for your friends who have been around for some time in the insurance sector, they may move from agency A to B to C accordingly. Alright, now the reason why is because sometimes when they get poached, they get offered what we call a sign-on bonus. These are often spread across several years to incentivize the agent to make the move and then stay with that agency for a couple of years more, so that they can kind of bring their client pool over and make money for this agency. Now as to whether or not the agent then gets you to switch your plan or hands you over to another agent in the old firm to continue servicing that plan, ultimately, it boils down to the agent themselves and what they choose to do, and there are many ways around it. Some ideal for the customers, some I'm not so sure. There are also 2 more categories that you need to know. Insurance agents in Singapore can also get compensated in another manner, which is through their trips and travel incentives. If you could get a trip to Europe, or to Japan, or to Korea, or to Venice, and all expenses are paid for, your flights, your hotels, your meals or hotel breakfast at least, and you can even bring along your spouse or partner. Isn't that a pretty good deal? It could be worth at least $5,000 to $10,000 or more. Damn! And these are what we call soft incentives in the insurance sector, whereby depending on what plans you sell or what the KPIs are, top performing agents can actually qualify for these if they hit their sales targets. And you can also be strategic about it, because sometimes the targets get lowered if you sell a certain type of plan. But guess what? None of this information is public to the consumer. Finally, there are awards and recognitions. If you do really well, you hit MDRT, COT, or even TOT, you get various awards and prestige for all of that performance. You can also get potentially some financial payouts that have been given to you by your agency or the insurer or your upline. So all these are just an overview of how insurance agents in Singapore get paid. And the reason why I think this is important for consumers to know is because only when you know that there is a conflict of interest, then for you gotta ask yourself and your agent, how are they mitigating this conflict of interest? The really ethical and good agents will ultimately serve their fiduciary duty, which is they will recommend plans that are really good for you. And in an ideal world, I wish that all insurance agents would not just do that, but also tell their clients the different alternatives available and point them to resources to learn about different alternatives, even if that's not something that they can service their client on. But let's get real. In reality, that doesn't always happen when you rely 100% on your insurance agent and you don't know this conflict of interest exists. When insurance and distributors change their incentive structures and their bonuses, none of this information is made known to the consumers. Really, what does this mean? It simply means that we, or you as a consumer, you have to become more educated. And the beauty of it is that in today's online world, whether you're watching this video on YouTube, or you've read my blog article, or you've actually heard me talk about this on Instagram or any other influencer that you follow, there's just so much content out there that you can learn for free or at a very low rate to actually get educated about all these options. Fuel up that knowledge gap. Don't just rely on your insurance advisor, or even better, speak to multiple agents and then try and get a sense. You'll definitely get better at smelling who's just smoking you versus who is genuinely thinking of your interest rather than their own commission. If you like this video, let me know in the comments below. And if there's anything that you spot that is problematic, I am still looking out for more contributions when it comes to insurance commissions, so feel free to send that to me. I look forward to hearing guys from you.